Alright guys, welcome back to the channel. If you're new here, welcome. This is a channel that is focusing on helping you achieve financial freedom and as an end goal escaping the rat race and the 9 to 5s. In this video we will be going through how money is actually printed and how the central banks are controlling money circulation. So first of all, we have our big central bank. Examples are the Bank of England, the Federal Reserve of America, the Bank of Canada, the Reserve Bank of Australia, the ECB, which is the European Central Bank. So those are all central banks of the different countries. Now there are two ways in which they stimulate the economy. One is with the interest rate. So this is something that we've all heard of. So in the pandemic, many central banks rushed to decrease their interest rates to very low interest rates, 0, 0.5, 0.25, or even negative interest rates. Now what does this mean? So this means that people who are keeping their money in the bank have a very, very low savings rate in their savings account, maybe 0.1%, they might even be paying to keep their money in the bank if it's a negative interest rate. And how does that stimulate the market? When people have an extremely low savings rate in their account, they're more inclined to try and grow their money by investing in the stock market, and eventually that inflates the market as well when a lot of people do it. With the lower interest rate comes lower rate for loans, mortgages, business loans, and that creates an incentive for people to remortgage their house, maybe for people to buy a new house with a mortgage. People might take out new loans for businesses because it's cheaper to borrow money. So once it's cheaper to borrow money, the general circulation of money would be greater as more people rush to borrow more and more money. People may also increase their use of credit cards as the interest rate is cheaper and is costing them less to pay it back. Now the second bit is a real mind blower. So how do they actually create money out of thin air? This is a process called quantitative easing. It's a very fancy term, but in essence it means the central bank creating money out of thin air, printing it with no basis. Recently the Bank of England have pledged to make £150 billion in quantitative easing over the next few months as England is going into lockdown. A lot of central banks have starting to increase their quantitative easing due to the whole pandemic. The US has pledged trillions over the course of the past few months in creating money out of thin air. So quantitative easing is the actual process. What they do is, so the Treasury, they create bonds which are basically a receipt to say that they have borrowed money. Then the central bank, then the Treasury, what they do is they sell the bond to any bank. So for example in England, Lloyds, HSBC, any of those, they can buy those bonds at a cost, of course. And this central bank comes in, and what they do is they buy the bonds from the bank at an increased price. So the bank is pretty much a middleman and they create a bit of profit for themselves. This central bank, they buy the bonds, but they buy the bonds with a blank check. They're not paying anything for these bonds, they just give a check for money that is not accounted for in the central bank. And this is where new money is produced. That's how they create money. By buying the bonds from the banks in turn have more money to lend out. With lower rates, people are more inclined to borrow money, and there more and more wealth is and money is produced. More and more currency is produced, not money. Secondly, they loan money to different companies. So maybe any businesses, they start getting loans. You might have heard about the bounce back loan in England, which is for businesses struggling in the pandemic. Now, any business can apply for these loans, and this leads to the business spending more and growing more, which in turn increases the amount of money or currency in circulation. Now, all of this stuff as a whole, when it's in a cycle, that all stimulates the economy. And that is how money is created out of thin air, and how central banks have been ripping you off for the past decade. This money that they produce, quantitative easing, it's not accounted for now, but all this money that the central banks are printing and creating out of nowhere, eventually we, the common taxpayer, the public, will have to pay for it for generations to come through increased taxation. Your children will have to pay increased taxes. Their children will have to pay increased taxes. It's a generation. So anything we're doing now, the comfort we're having now through quantitative easing, that's going to be heavily paid for soon into the future, and that's not what they're telling you. Another hidden cost of this quantitative easing is inflation. Now, inflation is a massive issue that is only affecting the common people. The rich, they have it off with inflation. They have assets that that increase over time, that beats inflation. So they're increasing their wealth over time. However, the common person who just saves their money is losing their money each time. What inflation is pretend this is $1. Now this dollar now, 100 of them would be able to buy me, quite a bit of stuff at the supermarket, won't it? You could do a weekly shop with $100 for a family. Now, because of inflation, what happens is this dollar, it becomes more and more common around the country. More are being printed everywhere. Now, as it circulates more and more, the power of that dollar weakens. Now, this dollar, 100 of them used to be able to buy a whole weekly shopping for a large family. Maybe in 10 or 15 years, that would only be able to buy a weekly shopping for 2 people. The value of the dollar is decreasing year on year. At the moment, central banks target 2% inflation. Now, because of this whole pandemic situation, they're printing more and more quantitative easing is going on. Again, they're trying to satisfy the needs now, but they're compromising the needs of the future. This is not sustainable. Eventually, here's a fact, 22% of all US dollars ever to be in circulation have been printed in 2020. 22%. Now, how long has the dollar been around? Over a century. 22% of all dollars in creation has been printed this year. This obviously has a huge cost to the taxpayer through increased taxation, increased inflation. This 2%, you might be looking at 7% in the future. Or you might even be looking at a complete demolishment of the fiat currencies. The dollar might end completely, which is why these central banks are now looking at digital currencies. Now, I really suggest you look at what these central banks are doing and look at the legislation around digital currencies, as there's a lot going on. You got a lot of value out of that video, and please be sure to subscribe to the channel and leave a like and any comments down below of video ideas or any feedback. Thank you very much for watching.